Gold has been going higher lately, and people are speculating on how high can it still go. They're using technical analysis and all of that, but I'm not using those techniques. We need to quantify this on a rational basis. And one of these rational quantifying techniques is the futures curve. Okay, there is this thing on the CME group with a lot of numbers, and they give you the price at different years. And with this price, you can create a futures curve. So that's what I did for gold. And you can see here, this was a futures curve in March of this year. And then gold shot up. A month later, this was the futures curve. And then here, and then today we are at this futures curve. As you can see, this futures curve is predicting that gold is going to go up in the future. Okay. And they also give us a quantifiable number for that. So in a few years, gold could reach 2,800 at the current time. And that is the price that the price goal that I'm looking at. So by technical analysis, you can create whatever price that you want. So 3,000 could go to 3,000, could retrace to 2,000, could go to 4,000. You don't know, but with the futures curve, you can actually have a number, which is very important because you can use these numbers to value companies and see what the upside potential is. I can now value a company at, for example, 2,700 gold in 2 years from now. And based on that, I will make an investment decision. Okay, now the futures curve has a slope. Okay, it has a rising slope, and this incline can flatten out. That's possible. This can get into backwardation, for example, where the futures curve is lower than the current price. That's possible. As the price goes up, maybe it will flatten out at some point, like this, and then prices could drop. So if we are backwardated, that means that the price could drop in the future. When we look at gold currently, we can easily see that this futures curve keeps on rising. So it's not flattening out, it's just moving up. The whole curve is moving up at the same pace. So that means there is more upside to come in gold. Let's move on to silver. Let's go to the silver chart. And here we can see that people are predicting silver to go to 40. Some even say 100 or 50. Who are you going to believe? That's just technical analysis. What we are going to use is a quantifiable number, which is the futures curve of silver. And this is the curve today, 31 going to 35 in a few years. Of course, this curve can shift up and down, but at least you have a certain number in your head, and that's 35. Okay? If you hold it long enough, it will go to 35 currently. And with 35, we can value companies at that price and see what the upside is. Now there is also oil, and people are very bullish oil. I am not bullish oil. I think oil is going nowhere, and we can already see that from the futures curve. So the futures curve for oil is like this, and it's basically in backwardation, and we are going to expect oil to go down to around 70. Okay, so I don't see upside in oil at the current time, which is also good for mining companies because costs will go down for mining companies and their revenue is going to go up for the gold miners and also for the silver miners. So I would indeed put my money currently in gold miners because this is not going to go up while the revenue is going to rise. So that's how we use the futures curve. Now on to these valuations. So for gold miners, we know that gold is going to rise from the current 2,400 level to 2,800 in the coming years, based on the futures curve. And that futures curve can even rise or drop, but probably it's going to rise even more. So 3,000 is also possible. Based on this number of the gold price, we can estimate what the upside is for gold miners based on this curve. For example, Serabi Gold has the highest upside, 600%. Some other miners, 400%. Some of the mid tiers have 200% upside, and the larger ones have, let's say, 50% upside. Some even 100%. So you're talking about a lot of upside, doubles, triples, quadruples. Now for silver, we're only going to go to 35, okay? We're not going to go to 50 or 100. 35 is the number based on the futures curve. What is the upside for some of these miners? Endeavor Silver could go to an upside of 100%. So that's a double. This is Silver Corp could go to 50% upside. Then we have Silvercrest has actually downsides because they are overvalued. Guanajuato Silver could go more than a double. Avino Silver, if they actually built their mine up to 8 million ounces, could go up 500%. So that's highest upside. Then we have some developers, Abra Silver, also a lot of upside. First Majestic is probably having downside. Gatos Silver, just a little bit of upside. So yes, based on this, the upside for silver miners is lower than gold miners. Some have a double, some have a 50%. That's not too good. For the gold miners, we have 5x, 3x, and 2x. So that's why I'm putting the money in gold miners instead of silver miners. Copper miners, I haven't looked at that futures curve. That's homework for you to do. But yeah, this was just a tutorial for you to look at futures curves because they actually give you a number of where the commodity can go to. And it's not looking good for oil. Just a hint. I'll see you in the next video. Bye.